Hello, how do swing traders pay taxes? Well, it's good to know your income tax bracket with IRS and your state. And then you know the due date of estimated tax. So we are going to, and one way you can know your ordinary income tax bracket, you can go to IRS website and just pull, let's do 1040. And when you scroll down, because again you will get 1099B from your broker that you will use at the end of the year. We'll click on the instructions here. You will use at the end of the year to file your 1040, and therefore your swing trading profit will go on your 1040. So pretty much, let's go to page 64 here to see that will work. Okay, so when you pull the instructions for 1040 individual income tax return, toward the end you will see the tax brackets here. And it's good to just know your income tax bracket. So there are different ways you can estimate how much you need to pay in taxes, but I just like to go the same way. Let's open IRS again. You can do 1040 ES, which is estimated tax, and when you open it, it has instructions. If you are trying to pay the minimum tax, you can read the instructions and see what the rules are to determine how much you need to pay in taxes throughout the year, so that you do not owe too much money. But again, I like to just go the simplest way, and that simplest way you will end up paying, in a lot of time you'll end up paying more tax and might have a refund back. So if you are not worried about that, that's what I'm going to show in this video. So let's go back, and now first you need to know your income. So it'll be good to pull your tax, your 1040 that you filed in 2024, like you are filing now, and that is due by April 15 of 2025. So when you pull it, you look for, that is the 1040 2024. So W2 will go on line 1A, and other incomes, and you'll have line 7 will have swing trading profit or loss, from schedule D will go on line 7. So, and then your total income will be on line 9, and that total income is what we want to work with, or adjusted gross income. There are some adjustments income from schedule 1 line 26. Let me see if they have the schedules here. No, they don't. So we are going to work with the adjusted gross income, which is line 11, and you'll take that dollar amount and you'll use that as your income from 2024. That includes your W2, your swing trading profit or loss, and all those. Especially if you have profit there and you think you might have about the same profit, you can use pretty much that line 11, your total adjusted gross income. It seems like schedule 1 will be more like if you have business, you're a business owner, profit or loss from that will be on schedule 1. But let's go back here and make sure. In fact, if I put 1040, I think it has those schedule 1. Yeah, we will use line 11 because it has some other incomes that will go on this, and yeah, we will use the income that include that as well. Now let's go back here. So line 11, adjusted gross income. So you'll take your adjusted gross income as your income to calculate your, to determine your bracket. So we are going to use an example here. No, this. Okay, so we have adjusted gross income here, 134, and we are going to go and compare that to the tax bracket that it is for. So let's go all the way to the bottom, and we are noticing that it ended on 99, 91, 92, 99. So for income over $100,000, use the computation worksheet. Okay, so let's continue here. And don't know if it's too small for you to see it, but let's make it a little bit bigger. Okay, so income so again, you need to know your filing status. So if you are single, you're looking in the income in the single section. Again, it will be depend on the filing status that you use on your 1040. So if you are not sure, you will be able to go on your 1040 and look at the filing status, which box was checked. For the example we are using is based on filing jointly. So we will go back and we will scroll down. So filing jointly or surviving spouse, we will use you see they have filing separate, they have a head of household as well, but we will use filing jointly. So filing jointly, they say the taxable income if line 15, so this is the taxable income, it took adjusted standard deduction out of it as well. It took standard deduction. I hope I'm not confusing you. It took some adjustment out of it, standard deduction or schedule A out of it, but I do not like to do that. I like to just use the adjusted gross income. But again, you can use the taxable income line 15, or you can use your line 11 adjusted gross income. And I like to use adjusted gross income. But to decrease the amount of tax you are going to pay, you can use the taxable income on line 15 because it's taking the standard deduction out of your adjusted gross income to find that taxable income there. So I'm going to compare my line 11 to the tax bracket here, to the income bracket. So they say at least 100, but not over 201,000. So that means the 22%. And so pretty much you can do some calculations here where you put the income there based on line 15. You put line 15 income there times 22%, and then you multiply. Yeah, that will be here. You subtract this amount out of it, and tax is line C. Subtract this from line C to put it there. That will be the tax, but we are not calculating the tax, we are looking for the rates. So for this income tax bracket, that is the tax, the ordinary income tax bracket, 22%. So I will go to my swing trading spreadsheet, and I will go to estimated tax area, and then I'll put that 22% there. Let's see, and you can just add it on your spreadsheet, and as you track, you record your swing trades, you track your profits, you'll automatically apply the percentage on it to calculate the tax on those profits on a monthly basis, so that you can, for every quarter you'll be able to make your estimated tax payment. So how swing traders pay their taxes, they pay estimated tax, and that is how you determine how to calculate your estimated tax. Know your adjusted gross income or your taxable income, depending on if you don't mind paying more in taxes, or if you want to pay less taxes, you can use that to find your tax brackets, and you put that on your spreadsheet. And as you record your profits on a monthly basis, you apply the rates on it, and those are the tax calculated there, but automatically it's calculating it on the monthly profit here as well. And you will do the same for your states. So now you know for the IRS, but let's do the states, and then we'll come back to IRS again. For the states, you know what, I'm going to just open let's open this one here. So for the state, you'll Google it, pretty much 1040 ES for the state, and see what they are saying there. So based on that, they say how to compute the estimated tax for Iowa. They say 100% of your prior year Iowa tax liability, or pay 110% of prior year tax liability if their adjusted gross income was exceeded 150,000 or 75,000 for verified separately. But anyway, so let's say, because they do charge penalty when you do not make enough estimated tax payment during the year. Let's say based on that 134,000, Iowa tax was 5,300. Then based on what they are saying, pretty much 100% will be 5,300. So they want you to make at least 5,300 estimated tax during the year, pretty much. But again, take into consideration that your W-2, your employer will be withholding a payment on it as well. But the way I like to do it for Iowa, I don't know where I found it last year, but I found the tax brackets as well, and I used that, but I don't think I'm finding it here. And that was 6%, and I think the highest was 8% or so, and I just used that 6%. But I'm not seeing it in these instructions that they have here. So, but again, it will depend from state to state. So if your state collect tax on income, it's good to know your tax bracket based on your income, or whatever the rule is, and use that. And so it's good to know your tax bracket at the beginning of the year so that you have it ready. So now that we went through those, the next things we are going to look at is the due date. And on 1040 ES, they have the due dates. So we just need to scroll, and you can read the instructions to see, how they instruct you to calculate, to estimate your estimated tax on that 1040 ES. I'm just showing you the simplest way I like to do it, even though that result on paying more taxes. I just know that I'm going to get a refund back later, and I tend to do a lot of things like in different stream of income wise. Therefore, I like to make sure I'm paying enough tax so that at the end of the year, when I file our taxes, I have a refund, not owing money to IRS or the state. So I don't have problem paying more in taxes, but that's just me. So for IRS, the first payment is due by April 15, 2025. The second one by June 16. So pretty much by default, you can just say April 15, June 15, September 15, January 15. It's now really a quarter, like it's now 3 months between them. So between April and June, I don't think like January, February, March is getting paid in April, but April, May is getting paid in June. Does that make sense? Maybe the first half of June is getting included. I'm not sure. June, July is getting paid in September. Maybe with a portion of September included. September, October, November, December. That's quite a bit. It's getting paid in January. So it's now really split 3 months apart from each other. So it's good you include those due date on your spreadsheets, which I didn't do here, but it's good to include that so that you do not forget when it is due. So they file, for instance, you can put due date, and the first one is April 15, the second one is June 15, the third one is September 15, and the last one is January 15. And when you pay, you put the date. So now to pay the taxes, how do you do that? It's good to go to IRS website. Let's open another one here, and under pay you have those, and you click on estimated tax. So when you click on estimated tax, if that's your first time, you'll have to sign. So estimated tax for individual, you will click on that, and you can read through it as you do that. I don't know why it's taking me to instructions, but let's go back. Pay, estimated tax. I think I'm going hold on. So they have all those things that you can go through, but it's not really, it's taking me to the instructions because I'm clicking on that. So pay by, let's click on bank here, and it will be good when you are doing that you take a note. That way next time you are going to do it again, you don't get confused on the button you click on. You have your instructions to work with. So personal tax payment, pay individual tax. So let's click on this to see where that is going to take us. And so it's giving you those options: make a payment, look up payment, and your payment information and all those. So individual tax, make a payment. Let's click on that and see what it is going to do. Okay, so yeah, it's now really taking me to the right place that I want to go to. But let's continue here and do estimated tax, and then continue. Just continue here. And interestingly, that's how it's taking you in, which is okay. But anyway, you see the process, but it's not really what I was expecting. Maybe because it's direct pay, I'm not sure, but it will allow you to create an account. That's what I will prefer you do. You create an account. That way you just log into your account and make your payment. and right now I'm not seeing okay, this sounds familiar here. Pay from bank account. You click on that because it's going to direct you to create an ID.me account. So but it's taking me back here. Maybe it will allow you to pay without, okay, no sign in required. Maybe it has, maybe it has that option, but your online account. I think periodically they change things on their website. Okay, so last year it was not that confused. It was confusing, but just pay method has the option for you to have an account. So if you go that route though, but the beauty is they are giving you an option to direct pay. You can do that, or if you want to create an account, you'll create an account with ID.me. I think they have login as well, but ID.me, they have ID.me. So ID.me could take you, I don't know, could be done in a one day. You'll create an account through ID.me, and once you have it, you'll be able to go in, log in into your account, and and just sign in and log into your account there. But that's your first time you are going to register, so you'll be using, create an account through ID.me. But it seems like they have options for you to make payments without actually having an account. But again, you just have to see which one works for you. But you'll find a way to get in and make your payment, and that is the way to go. So just go to IRS and see the options, and you have to create your online account option, your direct pay through your bank that you can do without signing in as well, and hopefully it will allow you to track how much you have been paying on a quarterly basis. But make sure you are keeping track of your payment, and you are saving a copy of your payment as well, so that you have that. Because when you are filing your tax return, if we come back to the form, when you are filing your tax return, you are going to have your W2. This is going to be the tax. You are going to have the W2 tax withheld on line 25. If there is 1099 tax withheld, it will go on line B. But there is line 26 for estimated tax. That's where you will put your estimated tax. That's why you pay on a quarterly basis during the year. You are going to total them and put them there as well, and those taxes will be total up minus some other credits that will decrease tax $1 per dollar to find whether you have a refund or you owe payment. So you'll have your total payments there, and the subtraction between that and the tax will give you a refund, or if you owe, so your overpaid will go on those, and that will be the refunded amount. But that's how swing traders pay taxes. At least that's the process I go through. So it's good you know how to pay the tax, actually make the payment. It's good you know your tax bracket, so that you can use that to apply on your income on a monthly basis and total them to see how much you need to pay by its due date, and then you make the payment and track your payment as well. So at the end of the year, you'll get something similar to this 1099B from your broker, and your realized gain and loss will go on your 1040 schedule D, and some of them will go to form 8949 and flow to schedule D to flow to your 1040. But again, you have short term, you have long term, and long term is tax at 0%, 15%, 20% tax rate, depending on what it is, and is assets that you held for more than a year before you sold them and made profit. And the short term are taxed at your ordinary income tax brackets. That's why, since we are swing trading, meaning we are buying and selling within months, that's why we are using we want to know our tax brackets, and we want to know our adjusted gross income to determine the corresponding income tax brackets, and use that to calculate the tax to pay in advance, which estimated tax is to pay by the due date to IRS, and you do the same for the state, so that you do not end up having to pay a penalty when you file your 1040. Yeah, and again, it's good to know your due dates. And yes, if most of your profit and loss are due to short-term trade gains, it's good to know your tax bracket, because you'll be taxed at your regular tax bracket. So thank you so much for your time. We thank you very much for watching our videos, and we thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, Curious of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. For more swing trading related videos, will you please check the playlist in the description of this video. Thank you. And for the state will have instructions on how you can pay your estimated tax. Something I like to point out is you can actually mail. Let's see if they have it here. They have, if you are paying by check, they have where you should mail them to. So you have to locate your state. So if we try to locate Iowa is in this section. Therefore, we will mail the check to that address. So if you want to go by voucher, that is what you will do. So it should be able to have voucher on here. Okay, so it has the tax rate schedule here as well. That's good. And married filing jointly from 96 to 206,000 have 22% there as well. But yeah, it does. If you want to be very, you want to calculate it to make sure you are paying just the right amount and not anything more, yeah, you can go through that session, and read it and complete that worksheet. You can use this to record your estimated tax payment that you are making as well, or you can just do that on your spreadsheet. But I'm looking for Okay, they have those. I'm looking for the voucher. So if you want to pay by check, you can print the voucher out and you complete it. Like, you can just put your information in it. For let's go to the first one at the bottom. You save this on your computer, and when it's the time, you complete the voucher with the amount you want to pay for that month, your name, your first name, last name, social security, and a spouse if you are filing jointly, so that will be for both to put on it, the address, and you just print it out and cut that portion, add the check. They will have instructions how to write the check, and we saw the address as well. So, and what will go on the check? Social security will go on the check as well, and you'll put 1040 ES 2025 on the check memo, and you'll take the check, don't step away, and the voucher you put in an envelope, you put the address we come across earlier, and you mail it. And I will suggest when you are mailing it, you mail a certified mail, so that you have a tracking number to add it to your record as well, just in case they say they didn't receive it. Also, you have proof that you mail your estimated tax and you mail it on time. So that's if you want to mail it. Otherwise, you can just do the direct payment option by just going online and just pay through your bank account. And I think there is fee paying by card, and fee and free paying it through the bank. And that is the option that you'll go through. So thank you.